Good morning, everyone. Today is Thursday. It is February the 14th, and this is the futures in 5. Taking a look at the markets, we have got a volume profile sitting up here that I want you to take a peek at. And what we've got is some very noisy price action. You can definitely see resistance up here. I've got the depth of market sitting here, and you can see that there are sellers sitting here. Once we get up and over this edge, we could accelerate quite rapidly because there's nothing really blocking the motion. And my thought is that quite a few folks are short, and so we keep grinding our way up. Here's a very interesting thing. The better everyone gets at reading signals that show what downturns are supposed to look like, the more they position themselves in the spaces where downturns occur. But when there are a lot of people there, and some of them have weak hands and some of them have strong hands, the weak ones get pushed out of the way first, and the only way to get out of short trade is buy to cover. And so that grinds the market upward. So really the only people ending up holding are the ones with the deepest pockets and the strongest hands. And guess what? That's the way the market works. The market is going to take as few people as possible with it when it works out. So here's the easy thing for us. As intraday traders, we need to move with the trend. And what does the trend say? The trend says your pullbacks are buy zones, right? You don't use the moving average to say, hey, if I'm above it, I'm going to do this. If I'm below it, I'm going to do this. That's really, that's a way to get yourself in a lot of trouble. But essentially, if you pay attention to, wow, I wonder where all the buyers are, and that's where support is, and I wonder where all the sellers are, that's where resistance is, and you take these trades into what the market gives you. I work with somebody every day, and he says to me, take what the market gives you. Totally spot on and really absolutely true. So what are we looking at? A range-bound event. Here's the VPOC from a couple of days ago. It's proved itself out as the level of resistance slash now new support. And so we're likely to continue to grind our way until the levy breaks. Wherever that is, I don't know. You know, it could be breaking here. Here's what I know. This is old support. It's been support since sometime in the afternoon of February 12th. Intraday traders are then going to say, all right, if I lose this support and I try to recapture it, which some people will because they'll buy on the dip that they see as value, if it doesn't hold up, guess what? We've got a ride down and we've got low volume pockets sitting in all of these regions that could easily pull back into frontline support. It's going to be messy. It is. It's going to be messy. All right, so taking a look at the NQ, same sort of thing. We've got the levels sitting up here, and I really sort of want to clean all that up so it doesn't look like a mosh pit right there. So what do we have? Resistance, right? Resistance sitting here. We've got volume, low volume events sitting here. That's going to be an auction vacuum that we will very likely retest. But as the momentum holds steady, this has got to exhaust. This motion that says, hey, I'm going to buy the pullbacks, has got to exhaust. Where does that show up? 7,011, 7,008. Pullbacks going to be buy zones until they're not, right? This motion is going to exhaust. We've been talking about that forever. It's going to exhaust. But the reason, if we're saying to ourselves, holy cow, why isn't this rolling over? It's because a lot more people are learning to read signals, and that changes how they interact with the market. It's just a fact. So we're going to look at resistance. We're going to watch the fades down into support. You can see where these volume profiles are sitting, and we're sitting on the edge of this particular motion. It could break easily. Easily it could break. We are not breaching the highs from the day prior. We've got a little bit of technical divergence. The weight of motion puts us underneath the volume points of control. They're going to try to buy it at the first pass. If they fail, guess what? We're going to fade. Otherwise, we'll hold. And that's super messy. That's somebody say, hey, it's like you're all over the place. You know, here's the thing. These markets, they're messy. And if you try to trade intraday, you better have your thinking cap on. This is not an easy trend. And like I tweeted just a moment ago, if you think that this bullish action is going to carry through, you better be in a hurry to get out, or else you are going to have a risk drawdown intraday that you just cannot manage. Intraday pockets are not deep, right? Well, I hope you don't make them deep pockets, because sometimes that gets really, really messy. How about just waiting? How about being patient, watching for the pullback? Here is the point of control right here. That's easily a support zone. You could also have this level, which is a range-based formation that we look at for ourselves from an intraday pocket, but this movement is a little bit divergent. And so these edges, people are continually trying to short the highs. And instead of saying, okay, this is it, and getting out when they see buyers show up, it turns around and they go, what the heck happened? You've got to be more active in how you manage your motion right now. It is super important, absolutely critical, and realize that if it breaks out because of the divergent action, and really what's happening is, you know, this buy to cover doesn't put people in the market. It takes people out of the market. And what that ends up doing is creating an interesting profile that can fall like a stone, literally like a stone. So what are you going to do? You have to watch these levels, 709, 868. Those are the regions up above here. My thought is, this is what we're going to look at. Big, heavy action that spikes up, fakes people out, and fades right back down until we eventually break. All right, oil. Great motion here. We've had this level. Look at this one. Just huge. That price motion is still there. We continue to move upwards, right? So what are we looking at? Well, in the big scheme, in the grand scheme of things, it's still very sideways. We're trapped between, I don't know, 55.70, something like that, and 51.80. And so the pullbacks are buy zones. We can clearly see that. The question is, how big is the pullback? It's probably going to be less than we anticipate. The EIA put out a report that said, hey, you know, global supply is going to really affect price from a downward space. Goldman comes out and says, hey, you know what, it's going to be an epic move to the upside because we're going to be shocked by the amount of pullbacks. So we have different cross currents of what's being said. What do? We need to look at the charts. And when you take a look at this and you see, hey, I am range bound in my motion. Literally, my best bets are pulling off this edge and moving to up here. And that seems to be what this is in the business of. So we wait for a pullback and we take the buy zone. Gold was very busy yesterday. Monster moves. But we know these edges down here are primary support zones. Even if we break down, buyers are going to come into the mix. This chart has been recovering, what, since October? I don't even remember. We've been talking about it since November, the pullbacks being buy zones. But notice the heavy congestion. This heavy congestion says that we are landlocked until fill in the blank, right? For me, that blank is going to be until I'm not landlocked, until I get out, I close, and I hold above it, and voila, there I am. And so why it's moving, what it's doing, I'm not smart enough to figure that out. I look to somebody else for that. For me, I say, hey, where is my support? Does it look like I'm going to hold it? Can I see it hold it? And then once it holds my support zone, can I trade it into resistance? And vice versa. Same sort of thing we're going to see over the next bit. My guess is going to be the next time something comes out on rates. I have no idea. So, you know, you watch and you wait and you position swift, quick trades. We are very fortunate because we have little zodiacs, right? We aren't aircraft carriers that take a long time to turn around. We can get in and out, and we have to use that to our advantage. Good luck trading today.